Good evening, everybody. Hope you guys are doing great. Welcome to yet another live trading session with myself, Isaac Izy. Super excited to have you guys here today. Um, yeah, man. While we're waiting for people to come in, please do let me know where you guys are tuning in from, which country you're tuning in from, which city, wherever you are tuning in from. Let me know in the comment section. Let me know in the comment section. All right. While we're waiting for other people to come in, welcome, 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 welcome. It's going to be an exciting day. It's been quite a while since we had our session. I believe it's been 2 or 3 weeks, and I cannot wait to be with you guys today as we go through, as we navigate this complex world of the Forex market. Welcome, welcome. Do let me know where you guys are tuning in from, which country you're tuning in from. I'm going to give you guys time to invite your friends. I'm going to give you guys time to post the link. Share this link with your friends. Share it in your WhatsApp groups, your Telegram groups. Share it on your WhatsApp stories. Share it on Instagram. Share it on Facebook, wherever, whatever platform that you use. Share it, as it's going to be an amazing session. As usual, we're going to be cracking down some of the basics of forex trading that can lead to a successful trading journey, that could lead to you improving as a trader and make you more profitable. That's what we're going to be doing it today. So please make sure that you share with other people and you don't just do here alone. So share with other people. All right, share with other people, share with your friends, share it with whoever you feel needs to learn how to trade the forex market. Please make sure that you do share the link with them. All right, I did share it on my WhatsApp as well. I shared in my Telegram channel. I shared everywhere. So let's get crack-a-lacking. Let's get crack-a-lacking. Welcome yet again. Do let me know if it's your first time with us today. Do let me know in the comment section, in the chat box. Do let me know. And also, if you are not in the Telegram channel, please make sure that you click the link that it is in the chat section or in the comment section. Make sure that you click that link to join our Telegram channel. That's where we share trading ideas. That's where we share trading psychology tips. That's where we share everything related to the financial markets. All right, let's begin with today's session. And before we begin, I just want to give us a disclaimer that any opinion, any news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute as investment advice. If you do seek any investment advice or financial advice, please make sure that you speak to a regulated entity or a regulated key individual that is regulated by the Financial Service Board in your country. If you are in South Africa, make sure that the person is regulated by the FSCA. All right, whatever that we discussed today is literally just general market commentary, and it's not investment advice, and it's not to be taken as such. All right, now that we get that out of the way, good evening, Theodore. At the end of this session, once again, I'm going to give you guys 100% deposit bonus. So after you attend the lesson today, I'm going to give you guys a promo code that you can use to double up your deposit and maximize your profit potential. I will give you guys this at the end of the session, as we always do. So stay tuned until the end of the session. And as I said, do invite other people, do invite your friends, do invite your family. Let's get more people engaged. Let's get more people involved in this. All right, and for those of you that are joining me for the first time, I just want to give you guys a brief introduction of who I am, so you know who exactly is going to be conducting today's webinar, and also why am I the qualified person to be doing this. All right, my name is Isaac Izy. I'm a professional financial market expert. All right, and I've been in this business for just over 10 years now, and over the years I've trained over 5,000 traders, and I've held over 300 forex seminars throughout the Southern African region. And my passion is to teach teach and train individuals to become professional traders, and most importantly, not to become professional traders, but to succeed financially. All right. For the context of today, yes, my passion is to teach people to succeed financially. However, my purpose and I believe my call is to teach and train people to become successful holistically. All right. So that's who I am. Let's get on to the business of the day. And I am excited to be talking with you guys today. Before we get to the strategy, before we get to the charts, I just want to debunk some myths that are, that a lot of people have been sold. A lot of people have been sold these myths or these lies, all right? And I just want to debunk them before we, especially for those of you that are beginners. Make sure that you understand this, all right? Number one is they say you can be profitable in X amount of time. I always, and this is one of the most annoying questions that I receive. People always ask me this question: Isaac, how long will it take me to be profitable? Guys, this is a business, all right? Trading is a business. It's not a game. It's not child's play. It is a business, all right? It's not gambling, so that you cannot set a time limit to say you can be profitable in 3 months, you can be profitable in a year, you can be no. It's literally dependent on each and every person. It differs, all right? So one of the myths that people sell is that by my strategy you will be profitable in the next coming month, or you will make $1 million in the next coming month. It is a lie. It's a myth. Don't believe the hype. Just come into the business and invest time and knowledge, and the more you invest in knowledge, the more you practice, the better you'll become, and the more you'll become profitable. Number two is they say you don't need to do any work. Here's a robot or signal to do it for you. All right. Here's another myth that a lot of people get sold. They say you don't have to do any work. You can plug in a robot. It's hands-free, or get this, buy my signals. You don't even have to know how to trade. Just buy this and then it will do all the work for you. It's a lie. Please invest in knowledge. Please invest in knowledge, and do not part ways with your money because you're trying to find a shortcut. All right, a shortcut is the longest route you will take to get to your financial freedom. And I'll say it again, a shortcut is the longest route you will take to get to your financial freedom, or at your financial destination. All right, are you guys with me? Number three is the trading myth. They say you can make a lot of money fast. Again, and I've always said this again, there is no such thing as quick money. There is no such thing as quick success. There's no such thing as easy money. All right, that thing doesn't exist. And whenever you hear this, you are the price. All right, you are the fast money. You are the easy money. It's not the other way around. You are the easy money. Whenever someone sells you the notion of easy money or fast money, you are the fast money for them. All right, they will make money fast with you, and you will pay the price to prove that there is no such thing called easy money or fast money. All right, and that goes hand in hand with number four. You can get rich with little to no money. Again, you hear the notion of people saying you can grow 1,000 rand account to 1,000,000 rand, or you can start trading with 100 rands and you'll be rich. It's a lie. It's a lie. It's a lie. It's a big lie. It's a big lie from the pit of hell. All right. All right. In every business, in any adventure, in anything that you do in this life, the output is directly proportional to the input. All right. And lastly, the myth is I have a holy grail strategy that no one else knows and you can buy it. This is another lie that people get sold, that I have developed, or I have found a strategy that no one else knows and you can buy it. It's a lie. Don't buy that myth. All right, there is no such thing as a holy grail strategy. As I always say, there are millions of strategies out there, and majority of them work. Let me not say all, majority of them work. However, the difficult part is finding a trading strategy that works for you. That's the difficult part. The difficult part is finding a strategy that works for you. And as time goes by, when we're dealing with trading psychology, I'm gonna dive deeper into that so I can explain what exactly do I mean when I say you need to find a strategy or develop a strategy that best works for you, because only you can master yourself. All right. Once you master yourself, then you are able to master or develop a trading strategy that best works for you. All right, now that we got that out of the way, let's get on to the business of the day. So today we're going to be discussing candlestick with round numbers. All right, for those of you who are joining me for the first time, you might want to go check out our previous lessons where we taught about round numbers or key levels. It's important that you know that, all right? And then we're going to be talking about rectangle chart pattern. There's some of the concepts that, especially as a beginner, you can, especially rectangle chart patterns. It's part of the what do you call? It's literally part of as a beginner. This is what you can really excuse me, sorry about that you can use as a beginner to become profitable, right? These concepts are literally beginners concepts. These concepts are some of the concepts that are foundational in the market. Once you understand this, a lot of other things becomes building blocks, and then you can grow from there, especially the rectangle chart patterns. I remember when I started trading about 10 years ago, these are some of the things that I learned, and till this day they still work. All right, and we're going to end with risk management tips. All right, let's get to it. Do we have any beginners? People that are joining us for the first time? Do let me know. People that are joining us for the first time, people that have never traded before, or you just recently started trading, let me know in the comment section. So I know how to navigate today's webinar. I had asked Octa to please get me a glass, a Octa branded glass, so I can have my drink with the. I have the bottled water, but I need a glass and a coffee mug. Please, Octa. I'm asking nicely. We have Hassan Baton. It's your first time and you're a beginner. Great. Koketo says yes. I don't know if that's a yes to I'm a beginner or what. But yes, do let me know. Let's get to it. Before we even begin, can I ask you guys that maybe just take a screenshot of this? This is what I call candlestick sheet. All right, candlestick sheet. It's something that I have put together, that we've given out to our. These are some of the most common candlestick patterns, all right, that you can use, and we're going to be looking at some of them today, all right, and how you can use them to confirm your entries. It's important to note that these are not just you don't just use them alone. These are used as confirmations of something that you already know, or something that you're already anticipating in the market. All right, it's important to know that. All right. So Abhinav says, I have a question. Should I bring it up or wait for the session? Bring the question. If it's something that I'm going to address in the session, then I'll let you know. If it's something I can answer now, then I will answer it. We have Adom Letsani saying, hey, first time joining your live trading session. I'm a beginner. Great to have you, Ador. We have Emmanuel Obinna all the way. I'm assuming you all the way from Nigeria, Obinna. It's your first time. Are you a beginner? Did you just recently start, or are you an advanced trader? Do let me know. And then we do have Theodore Mukwebo saying, I started recently, inspired by you. I'm humbled, man. I'm happy to hear that I have inspired you. Okay, great. Let's get to it. I believe you guys have taken screenshot of this. Please do take a screenshot of this. I personally have this. If you've seen videos of my office, or if you've been to my office, even my home office, you know that I have these things pasted on my walls, because sometimes it's just nice to look and just remember what something means. All right, so please make sure that you take a screenshot of that, and then if actually If I see Koketa says I've been here before. I just love learning. Great to have you. It means if you are coming back, it means what we are teaching is valuable. So thank you for your kindest feedback. All right. So we have Zenzo Twabaza saying I was trading in 2020. Great. Hopefully it's going well for you. Okay, let's move on. Let's move on to the business of the day. Where was I? Where was I? Yes. What was I gonna say? I lost my train of thought. Okay, no, never mind. Never. Let's move on. Let's move on. So yes, candlestick with round numbers. This is what I said. Candlestick with round numbers. So remember, candlesticks are useless on their own, and this is what I said. You must always consider the market environment and what price is telling you. So that means you must use candlestick as a confluence, as a confirmation to confirm what you are already analyzing. All right, because we use candlestick patterns once for reversals or continuations. All right, we use our candlestick for reversals, all right, to confirm reversals or to confirm continuations. All right, we confirm reversals or continuations. All right, depending on where a certain candlestick pattern will happen, whether it's a single candlestick pattern, whether it's a double candlestick pattern, whether it's a triple candlestick pattern, or whether it's reversal patterns like double top, double bottom, head and shoulder, and so depends on where they are happening. That will determine what they confirm. All right, and as with any technical indicator or tool, if candlestick point to a reversal or continuation, that does not mean it will happen. Remember, we are in the business of speculations. All right, we are in a speculative business. It's never a certainty. All right, it's never certain that something is going to happen. We just use some of this. Is why you need more confirmations to confirm that something is going to happen, because it's a business of probability. It does not always mean it will happen. That's why we have risk management tools like stop losses and so forth. All right, the simplest way to use candlestick is with key levels. Key levels, again, I refer to round numbers, or what we call double zeros, what we call triple zeros, what we call single zeros. All right, or what we call psychological levels. All right, depending on the name that you want to use. And I said again, if it's your first time and you haven't learned this, please go and search some of my other previous sessions. I do teach in detail on this, and we'll get to a bit brief explanation of key levels today. All right, because key levels determine areas where buyers and sellers have set up their defenses, looking at how candlestick reacts to them will help you in greatly predicting where price will go next. All right, so for instance, here we do have an example here of a chart. All right, and we have our key level over there. All right, it's our 001.4900. All right, and then that acts as a resistance. So we see the market hit that target, it went down, came back to hit that level again, and it might look like it's going to break, but because of candlestick patterns, let's see what happens next. Bang, we have a 3 inside down formation, which shows that it's time to sell. All right, it confirms that it's time to sell. Why? Because it happened right at our key level. All right, so we have that confirmation, knowing and understanding that most reversals happen at key levels, and now we do have a 3 inside down formation that confirms a reversal. All right, a 3 inside down formation, you can go back to that. All right, let's see, where is it here? I don't think it's on this one. All right, I will send you guys. Oh yes, this is what I had forgotten to say. If you are in the Telegram channel, I will send you this candlestick sheet. I'll send you the the other ones that I have as well. We have Odudu Emmanuel saying, what is candlestick? All right, that is a good question, and which is why I always ask if it's your first time here. All right, which is why I always ask if it's your first time, you've never traded, so I can make sure that when I explain, you understand. I'm happy that you asked that, Emmanuel. So what a candlestick is, Emmanuel, is you see this graph. All right, you see these graphs. All right, these single things, these ones, we refer to them as candlesticks. Why? They look like candlestick. You see, that's the body and that's the thread where you put on the fire. You understand? So we refer to them as Japanese candlesticks. They are called Japanese candlesticks. That's their full name. All right. And so yes, they look like candlesticks. So we refer to them as candlesticks. All right, these things are used to give us data. They give us information as to what is happening in the market in that particular time. All right, so we have two types of candlestick. We have the bearish and we have the bullish. So that means we have the candlestick going up, we have the candlestick going down. That's why they have different colors. You see the green one is going up, the red one is going down. So those are the two types of candlestick. But we have also types of candlestick. We have we have the long ones, we have the short ones, we have ones that literally have small bodies. All right, so there are many types of candlesticks. What's important for you to understand is that every candlestick will have an open, it will have a close, it will have a high, and it will have a low. Let's take an example. This is the high of this candlestick. That is the low of that candlestick. At the low, we have an open, and then we have a close over there. Similar to this one. Low, high, open, close. So every candlestick will have this. All right. So it's important to know that every candlestick will have what? It has a open, a high, a close, a high, and a low. And all these four things are important. All of them are important because they give us information. They give us data when we're analyzing the markets. All right. I hope my brief explanation does at least give you an indication of what apologies on that, on what candlesticks are. So these graphs here, we refer to them as candlesticks. All right, and we have a question here that says, during news, if I have a buy trade with TP and SL set and the price spikes after the news going far beyond my TP where my trade will settle since price spike. During news, if I have a buy trade with TP and SL set and the price spikes after the news going far beyond my TP where my trade will settle since price spiked beyond my TP, or do I close manually? If you had set your take profit and the price does get to your TP, it should close automatically. It's also important to take note of the spreads, because usually during news events, the spreads are broadened depending on the broker that you are using. The spreads are broadened a bit, or they are increased. So the price might reach there, but the spread price might still be lower than where your TP is. So that spread price needs to reach your TP for it to close automatically. So if you see that the candlestick has reached your TP and it hasn't closed, please close manually, because that means the spreads have increased a bit. All right, so take that into consideration. What is your Telegram channel? If you go all the way up, to this chat box, you will see the Telegram channel. The Telegram link is been sent in the chat box, so make sure that you pay attention to that. Okay guys, let's move on. We're already here, and then here we see a 3 inside down formation happening right at a key level, or what other people may refer to as a resistance area or a key zone. All right, do you guys see that? So it's important that we use this, because if you look here, we don't have an indication of what is going to happen. The market might break, go above, the market might reverse. So we need a confirmation of what is going to happen. But again, it's important to note that using this in confluence with the key levels, because as we know, based on the concept or the principles of key levels, that many reversals happen at key levels or near key levels. All right. And then what happens after that? We see immediately after the 3 inside down, you see what happened there? 3 inside down formation, then bang, the market shot all the way down. All right. So here, if you're trading according to what I've taught before, if you're trading, there's a risk entry, and there's also what we refer to as confirmation entry. If you've taken a confirmation entry, then you would have taken it after the 3 inside down. If you're taking the risk entry, you would have went to a smaller time frame and see what price action you are getting there, so you can take an early entry at the key level. Are you guys with me? And now I want you guys to see the importance of using we're looking at the same chart, but I just want you to see the importance of not just using the candlesticks alone. All right, alone. You need to use them in confluence with other price action patterns and other concepts. All right. So what do we see here? We see a hammer. A hammer is known as a reversal candlestick pattern. All right. I mean, it's known as a single candlestick formation, and it signifies a reversal. All right. What do we see here? We see a hammer, and then you buy. The market is, and this is why most of the time you'll find that you enter a trade and then you are in profits, and then all of a sudden the market goes against you. You see, because you didn't use this in confluence with other principles of the market, market structure, key levels and all of that. You bought and then the market, boom, stopped you out. All right. Oh, then you see an evening star. Okay, that is a reversal confirmed by this bearish candlestick over there. You enter your sell, goes down, boom. What happens? Stopped out again. All right, you see a doji, you buy. What does the market do? Continues going down. So you see, you would have lost 3 trades using what works, but it's at the wrong place. All right, so it's important that you wait. You only use this where it matters the most, because you will get this reversal or continuation candlesticks, or that signifies a reversal or a continuation somewhere in within the trend. But it's important where it happens. It's very important where it happens. All right, are you guys with me on that one? So you don't just use the candlestick alone, we use them in confluence. For the purposes of today, we're only using them with round numbers. And we're going to go into the chart, all right? We're going to go into the chart, and then we're going to have a quick look on examples of what we can look at today. All right, so I'm going to go on a smaller time frame. Let me go on a 15 minutes, on a 5-minute time frame, so we can have a look, or maybe let's do a 30 minutes, so at least it's more we want to look at where the market was changing. So I get you, patience is key. Yes. All right. So now we're going to look at, we're first going to plot our key levels. All right. Let me plot my key level over there. $39,000. That's my key level over there. There's already 38,550. That's my key level. All right. There's already 38,650 over there. All right. So we see a bearish, an engulfing there. A follow-up question: if I set my TP and SLM price goes far beyond my, instead of going up, where will the trade settle? Again, the answer is still the same, depending on the spreads. If it continues going beyond, it means the spread has broadened a bit. So that means you may have to close the trade manually. But then if the spread price gets to your stop loss, then the trade will close automatically. All right. All right. And then over here, what's our key level over there? 500, 38,500. All right, so we see another engulfing there. All right, let me know if you guys don't understand. We have a 3 inside down there as well. We have a 3 inside down there going down. The market comes back again over there, giving us an engulfing over there and going down again. All right, we have good evening, Nicholas. Good evening, Nicholas. Maybe let me open a different pair. Oh, that's a nice one over there, evening star. Let's see what's our key level over there. 400, 18,400. See, that's a beautiful one. The market got to our key level and gave us that evening stand. What did the market do? The market continued going all the way down. Do you guys see that? We have an engulfing over there. Let's see what's our key level. 800. See, just after our key level, what did the market do? Gave us an engulfing and we shot all the way up. Same thing over there. Also a double bottom over there. Do you guys see that? At 970, 900. See that? Also confirming. See, even here the market turned exactly at this price over there. You guys see that? Even same here, 17,800. The market gave us a double bottom over there and it shot all the way up. Came and retested 17,900 with the hammer, shot all the way up. Do you guys see that? Using this in confluence with other with key levels for the purposes of today. So we can see that is our key level, 17,800. We got a double bottom over there and also an engulfing, confirming that there is a reversal. The market shot all the way up. We had the market coming to test the neckline of that what do you call, of that double bottom, and also that candlestick, that rejection candlestick, rejecting this price there, 17,900, confirming that we are going all the way up. Even if we go up here, all right, even if we go up there, let's see what's our nearest key level. We will look at the 300, 18,300. That would be our closest one. All right, we see the market manipulated a bit to the upside, came back down, gave us an engulfing over there, and the market shot all the way down. Do you guys see that? You guys see that? Even if we look over here, we see an engulfing. Let's look at, I can almost guarantee you that this is a key level. Yes, it is a key level. That is 17,350. And bingo, what happens? What happens there? The market shoots all the way up. All right. Do you see that using this in confluence with with key levels will greatly help you? Let's look at that. 17,950. That's a single zero. What happens over there? There's three candlestick pattern over there. Market shoots all the way down. Do you guys see that? Even here, we have an engulfing. I can almost guarantee you that is a key level. All right. 17,500. That is our key level. What happened at 17,500? The market shot all the way up, giving us a smaller inverse head and shoulder, shoulder, head, shoulder, test the neckline, and the market shot all the way up. All right. And as even if we can look at this test over there, I can guarantee that it happened at a key level. It probably happened at a 50. Yes, it happened at a 50. 17,650. Look at that. 17,650. That's where you would have taken your buy entry and the market shot all the way up. You see what I said, that the market always reverses at key levels. So now it's important that we get these confirmations as well. So if you go on smaller time frames, you'll also see that there are more candlestick patterns that happen to give you more further confirmation that you must go down. Same here. I can guarantee you that this is at a key level. All right, I can guarantee you. See, 0,850, we can even use 18,000. Let's do 0,850 and 18,000. So look at that. That was a nice snapper entry to the downside. We can also do 18,000. Let's look at 18,000. I see a question. I'll get to it now. See, look at that. 18,000. All right. Are there specific levels we need to mark on the charts, or we only mark the ones that end with hundreds? You can mark the ones that end with 50s. You can mark the ones that end with hundreds. You can mark the ones that end with thousands. All right. So like 50, 100, 150, 200, 350, 250, 300. 350 and so forth, 1000, 2000, so forth. As you can see, I have 500, I have 650. Even if I go 550 and we go on smaller time frames, you will see that whenever the market gets to that price, there is a bit of reaction. We're looking at 17,550 over there. All right, as you can see, there was a bit of reaction there. Let's go to a 30 minutes. Oh boy, what happened now? It was 17 what 17,550, I believe, that we looked at. Yes, 17,550. Look at that. Do you see that? That whenever the market gets to this price, there is some, if you go in smaller time frames, again, depending on what type of a trader you are, but you can see that whenever the market got to this price, there was a bit of reaction there. Even if we go 17,600, all right, we go 17,600, you will see. So it just depends on what type of a trader you are. Do you want to go smaller time frames? Do you want to go as small as you can, or you want to be on the bigger time frames and just take the hundreds? Like personally, I just do the hundreds, 50s sometimes, but my main entries are at the hundreds. You see that over there, there was a reaction on this price over there. There was a bit of reaction at 17,600. Same thing here, same thing there. Whenever the market reached this price, there was a bit of reaction. Do you guys understand that? Do you guys understand that? I see someone saying I must analyze gold. Let's quickly go to gold. All right, let's quickly go to gold. All right, so we can see that we are now in an uptrend on gold. Oh, that was a nice one. For those of you that were here, please, I have another question. If my leverage is 1:100, I'm going for currency pairs, not gold, for 0.01. I need if my leverage is 1:100 and I'm going only for currency pairs, not gold, for a 0.10 lot trade, I need approximately 100 to trade. What should be account balance to safely trade for a month? So if you were to trade on a 0.10, I would recommend at least $1,000. All right, I would recommend $1,000. All right, so that means you would be risking 10% of your account per month. All right, so I would recommend $1,000. We get you. All right, 100%. Let's look at gold. Let's look at gold. So what is happening currently on gold, as you may have seen, the gold has just been going up, creating new highs. Gold has just been going up, all right? We had this trend over there, all right? We had our first touch. We had a first touch, second touch, third touch, and then there was an impulse to the upside. The previous high we had was over there, and the market has just been since shooting up. So in a market like this, most of the time what I would recommend, I actually sent a sell at this price here, and the market just continue going up. What I would recommend is you wanna, let's go on a weekly time frame, right? And I want to show you guys something. You see, literally this is the highest gold has been. So we don't have any previous history. Remember, in trading, what we do is we compare current price against history, what happened before. So right now we do not have any current, or we don't have any history to compare current price with. All right, the market has just literally just been shooting up, not testing any levels, just creating new levels, creating new key levels. All right, so what I would recommend is, if really you want to trade gold, the best thing to do right now is to buy gold. All right, the best thing to do right now is to do what? Is to buy gold. So now you want to start looking at possible key levels where gold could correct and come back to before it goes up again. All right, so I can't start trading with at least, yes, you can. You can start trading with Octa. You can start trading from as little as $25. You can start trading from as little as $25. So now I want to show you a trick that you can use if you want to trade gold. So now what we're going to do is we do understand that the current momentum of the market is bullish momentum, all right? And what a mistake a lot of traders do, and which is the mistake that I fell into as well when I sent the gold signal around this area over there, was that whenever the market pushes up, we immediately, as you can see this price over there, I had used this price as a reference to say the market will reject this area over there and go down, because this was the highest it had been. All right, so, and then also using this great. Also, remember I said it's not all the time where you will get a reversal candlestick that it will that the market will reverse again. You see over there was a nice rejection over there on that price, all right? And what did the market do after that rejection? The market shot all the way up, and it happens, which is why my stop loss, I believe it was at 2092. I think my stop loss was somewhere around there. You see how tight my stop loss was, because also I understood that we don't have anything. If the market breaks here, we're definitely going to go all the way up, all right? But everything else was telling me that we're going to sell. So right now, what you want to do is let's look at market structure. We had that high over there broken. We had that high over there broken. We have this high over here broken. Our next high is literally this one over there. Even if we go on smaller time frame, you will see more price action over there. All right, this was our high over here. All right, that was broken. Market tested it. We had another high over there. All right, we had a high over there, and then we have a high over here. All right, so right now what we want to do is we want to look at significant areas that the market broke, and it could possibly come for what? For a correction before shooting up again. All right, let's look at this area over here. We have an area of consolidation over here. All right, okay, it was already tested. All right, I'm not going to consider that now, because this area was already tested with that candlestick over there. So but just out of nowhere, okay, we're actually in a consolidation right now. Let's someone look at that. So we are currently in a consolidation right now. So what we want to see happen for us to take a trade, like I said, if we're going for a buying position, what we want to see the market doing right now, let me just quickly go on a higher time frame so I have a bit of space on the top. What we want to see the market doing right now is we want to see the market breaking out of this consolidation. All right, remember I once told you guys about consolidation first. We want to see the market breaking out of this consolidation, giving us an impulse to the upside, coming back down again to retrace, to come and test this midpoint over there. And let's look at what our midpoint will be. Our midpoint will be 2180.00. That will be our key level over there. So we want to see market breaking out, coming back to this area over there, all right, and then shooting up again. All right, the market shooting up again. Or what could possibly happen is that we will have a break to the downside. All right, that is an impulse move. All right, what we want to see is we want to see a retracement. And when we get here, what we don't necessarily enter sales. What we want to see the market doing is we want to see the market giving us price action, reversal patterns that indicates, like the candlesticks that we were looking at, that indicates that the market will continue going down. Or because possibly what could happen, the market will come to this area over there to test this level over there and continue going up. Like I said, we have more buying power than we do selling power currently. So what we want to do is we want to look for buying opportunities. All right, so even if the market does get here, what we want to see is we want to see the market breaking this level over there, going above this price. Then we know that we're going to continue going up, creating more highs on gold. If not, then this is possibly what could happen. The market getting here and going all the way down over there. There's a lot of, price action that need to be rebalanced over here. So we still have to wait for that to happen. As you can see, price, ever since price broke this level over here, 20260. Ever since price broke over here, didn't test this level here, broke this level here, 20290, didn't test it. So price needs to come back and refill these areas to rebalance price action here before we go up again. All right, but as I said, the downfall we have right now on gold is that this is the highest we've ever been. So we have no history. We have no history. If you've been trading for a while, you will know that once the market creates higher highs, you literally have no history. All right, you literally have no history of to compare current price with. So right now what we want to do is we either want to let the market come back to these areas over here, all right, and start going up again, so we have a bit of history to compare our current price with, or we want to continue buying with it until we start seeing a more selling momentum on gold. All right, are we together? All good? Do we have any more questions? Do we have any more questions before I proceed? Questions? If SL is around $10 to $15 of every day, still is required 500 should be 500 should still be sufficient enough. 500 should still be enough. 500 should still be enough. So the reason why I said 1,000 is I said you might want to risk at least 10% of your capital in a month maximum. All right. So if you're now risking 10, if you say you're taking 10 trades and you're risking $10, it means you're now risking again 20% of your capital, which is still not bad, but yeah, you can. It's still sufficient, but yes. All right. Oh good, oh good, oh good. All right, let's move on. Let's move on. Let's move on. Let's move on. We have literally have about 15 minutes before we end today's session. All right. So we understand candlestick patterns. So now what we're going to look at is we're going to look at rectangle chart pattern. All right, like I said, this is especially for you beginners. This is, if you start using this right now, all right, it's either use it on bigger time frames, you can either use it on smaller time frames, whatever type of trader that you are. And again, we're going to go into the chart and I'm going to show you how literally it works. So a rectangle is a chart pattern formed when price is bounded by parallel support and resistance level, which is what we call a consolidation, what I was showing you guys right now. A rectangle exhibits a period of consolidation or indecision in the market. The price will test the support and resistance level several times before actually breaking out. From there, the price could trend in the direction of the breakout. It's important to note, could, not will. Could. Like I said, it's a speculative business. We always trade speculate. We always speculate. We always trade probabilities. From there, price could trend in the direction of the trend out, of the breakout, whether it is to the upside or to the downside. All right. So literally, a rectangle is that it is a rectangle. Price is just moving sideways. What we want to see is we want to see a break to the upside and buy, or a breaks to the downside and sell. All right. Okay. If I use moving average, should I still need to take resistance and support? Yes, I would recommend, all right, as much as I'm not the guy to say, indicators don't work and wada. So you can have your moving averages, you can have your SMAs, EMAs, but also support and resistance is important. For me personally, I prefer the key levels that I was showing you. I use them as my support and resistance. So you can still use your moving averages, your MAs, and then still use the key levels that I'm teaching. You now have a confirmation of both. All right, so the more confirmations you have, the better your probabilities will be. All right, so now, like I said, what we do is we look at price moving between two prices, just moving sideways, not trending up, not trending down. We understand on the rules of market structure that in an uptrend we see a series of higher highs and higher lows, and then in a downtrend we have lower highs and lower lows. All right, so when we have equal highs and equal lows, it means the market is just ranging or the market is consolidated. So now the rectangle chart pattern and how to trade it, some people call it the London breakout strategy. All right, they call it the London breakout, and what you need to do is, the market is we're gonna look at a bearish rectangle. All right, a bearish rectangle, that means you are in a downtrend and then you see a consolidation in a downtrend. All right, consolidation in a downtrend, and then what happens? You want to wait for price to break outside or below that box, below that support level. All right, once the market breaks, you enter your trade to the up, to the downside, and you have your stop losses above. All right, what will happen? All right, actually, let me not tell you that right now. Let me not tell you. I'll explain that in more details when we do price cycle, when you do consolidation phases and all of that. So with this strategy, literally, or with this concept, the rectangle chart pattern, what you want to see happening is that the market is especially for those of you guys that are day traders, especially if you're trading pairs like Euro USD, GBP USD, this strategy works best, or this concept works best for those pairs. All right, especially during the London Open. What you will see happening during the Asian session is that there will be a bit of a consolidation. All right, and then as the London opens, then there will be a breakout. Then you can take a trade to the downside. Most of the time you want to use the same length as your TP. All right, the same length of that consolidation, you want to use it as your take profit. All right, please, I lost $30 in a blown, didn't really knew what went wrong. I'd like to know why I really lost my capital. It's really because you probably you took a wrong trade, you took a long trade. And Emmanuel, I believe is the lack of education, is the lack of knowledge, because when you got here in the beginning, you asked me what candlesticks are. For a person who doesn't know what a candlestick is, you shouldn't be trading, you shouldn't be putting your money into a Forex account, because I can tell you 100%, there is 100% guarantee that you're going to lose your money. So attend more of these sessions. If you need personalized mentorship, let us know. Join our Telegram channel. The link is in the comment section. Make sure that you learn before you put your money, because if you put your money before you learn, you will soon be parted with your money. I think what went wrong is because you don't know what you are doing as yet. So be patient, invest in knowledge, attend more of these sessions. They happen Mondays on YouTube and Thursdays on Telegram. So make sure, all right, make sure that you attend all of these sessions, gain knowledge, and as time goes by, you will recover your capital. All right, let's get back to it. As I said, in a bearish rectangle, we are in a downtrend. We see a consolidation. We see a breakout of the consolidation, we enter, sell to the downside. All right, and then in a bullish triangle is the opposite. We are in an uptrend, we see a bit of a consolidation, and which is what I was showing you guys on gold right now. All right, what we were looking at on gold on a 1 hour time frame. All right, so say there is a bit of a consolidation. You see what happened there? The market went up, there was a consolidation, well, what we call a rectangle. The market broke out, shot all the way up, you took your buys. Same thing is happening right now. If the market breaks out to the upside, we take our buys over there. All right, all good, all good. So we have a bullish and a bearish rectangle. All right, now let's look at, I just gave you an example now. So you see the market is in an uptrend, that is a bullish rectangle. Same thing over there, right? Same thing over there. There's a bit of a consolidation over there. The market breaks to the upside, you take your buys, boom. Same thing over there. So whenever you see a trend happening and you see these consolidations, what you want to do is you want to wait for a break to the upside, then you take your trade to the direction of that consolidation, of the direction of that breakout. All right, and you'll put your stop losses just below that rectangle over there. And we see the same thing even happening over here as well. All right, and then you took a trade to the upside, same thing over there. So you see that the market, especially gold, moves in that way. All right, let's look for a bearish. Let's look for a bearish where the market was a bit bearish. All right, so you see over there, we had a rectangle over there, break to the downside. What happened? All right, rectangle over there, break to the downside. All right, do you guys see that? You get it? I'm looking for more bearish. Let's check where there was a downtrend on gold. A clear downtrend. Clear downtrend. Are you guys still with me? Are you guys still with me? Do you guys have any questions? Let's look at another one. Let's go on a US 30. Let's go on a smaller time frame. All right, let's zoom out. We wanna get a clear. There's a nice rectangle over there. We have a rectangle pattern over here. Market broke to the downside. You took your take profit. All right. Okay, thanks. Could a ruler be added to the Octa FX web trader? I believe so. I am a fan of MetaTrader. I'm a fan of MetaTrader 4. Give any setup on gold trade. We already did that. All right. Thanks for answering my question. Please, again, between MT4, MT5, and Octatrader, which one is best for trading? My personal preference is MT4, again, because I'm old school, but literally all of them, MetaTrader 4, MetaTrader 5, I know it has more. MetaTrader 5 has more what? Has more. What am I looking for? Has more tools, has more options, and Octatrader as well. Just my personal preference is the MT4 because I've just been using it for many years. All right. So on gold, we did say we are anticipating a buy. All right. On gold, we did say we are anticipating a buy. I see people saying, sure, as you trade. I don't have any current trade running right now. All right. So as if there is any trades coming up, you know, I'll definitely send in the WhatsApp group. I mean, in the Telegram channel. So as I was saying, on gold, two things will happen. All right. If we break out of this area over there to the upside, we want to see an impulse move, a retracement, you know, and then a reversal to the upside. All right. And then if the market breaks to below, we want to see a test over this area and see what happens there. The market could possibly come back here again, and then we can now start continuing with our downtrend. But there is more buying power, so I am looking for buys on gold. But also take into consideration what I said. We don't have any prior price action, you know, because gold has created new highs. We don't have any prior price action over there to look at and compare the current markets with. So we literally don't have anything to compare with. So if I were you, I would wait it out a bit and wait for more opportunities once we start seeing once we start seeing the markets once we start seeing history. The market needs to come back to this area over there. All right, the 2050 area, and then if it continues going up, at least we have a bit of history to compare with. Right now we have nothing on this side to compare with because gold is creating new highs. But then if you are a risk taker like myself, we should be looking for price to continue going up again. All right. All right, so can you explain liquidity? We literally have 1 minute. I will do a full on session teaching on liquidity. All right, so you guys can understand what liquidity is. What do they mean when they say the market makers are searching for liquidity? Have you any WhatsApp group for signals? No, we have a Telegram channel. The Telegram channel moderator, can we please get the link for the Telegram channel in the comment section? Let's get a link for the Telegram channel in the comment section. All right. All right. So yes, guys, that's it for today. Today we learned using all right. We today we oh boy. We learned using key levels together with candlesticks, reversal candlestick and continuation patterns, and I show you how you can use them to confirm your entries. And we also spoke about the rectangle chart pattern. This one specifically is for beginners, all right? Especially if you're a beginner, if you can do this, I promise you this will entice you to learn more about the market. It's really, I don't want to say simple, but it's really just easier to understand. All right, so if you see the market consolidating, you wait for a breakout of the consolidation. All right, you wait for a breakout of the consolidation, and then you take a trade. If you are in an uptrend, you want to see a breakout to the upside, and then you take your buy. If you are in a downtrend, you want to see a breakout to the downside, then you take the trade. All right, guys, before ending the session, can you please give us a brief explanation on the relationship between time frames when doing top-down analysis? All right, I'm glad you asked that, Theodore. My last webinar, the last webinar that I did, I believe, which was 2 weeks ago, I did a full 1 hour on multi-time frame analysis. Full 1 hour on multi-time frame analysis. So please make sure that you go and watch that so you can understand. I always recommend at least a combination of 3 time frames. All right, you want to go higher, you want to go mid, you want to go lower time frame. So please go have a look at that. I did a more thorough explanation so you also understand more on that. All right, when is the next lesson? The next lesson is happening on Thursday. That is on Telegram, though, not on YouTube. On Thursday, it's on Telegram. Please make sure that you join the Telegram channel. The link will be sent in the comment section. They join our Telegram channel, and then we're gonna have a session on Thursday. We're gonna continue more. We're gonna go more deeper. All right, we'll need a class on inducement. We will get to those. All right, so are you guys so guys, that's it from me. I see we're already over time right now. So what we're gonna be doing next week is we're gonna be touching on the fears of trading. That's what I wanted to touch today. I wanted to touch today on the fears of trading and how to overcome fears of trading, but because of time, and I also wanted us to look at risk management tips, but we will get to them hopefully on Thursday or next week Monday. Please stay tuned. You can take a screenshot of this. All right, take a screenshot of this, and then we will get to it. All right, and as I promised you that at the end of the session, I'm going to give you guys a promo code that you can use to get your 100% deposit bonus. Use the promo code Isaac Izy to get your 100% deposit bonus. All right, so that's it from me, guys. And again, just you guys remember to just give me a bit of your feedback. How was the session today? What did you love about the session today? All right, do let me know in the comment section. All right, so that's it from me. Thank you so much, Isaac, for the information session. Thank you. It's a pleasure. Thank you. I'll watch it right after. All right, great. Hope you guys had a great time. I did have a great time today. I will see you guys on Thursday on Telegram. I will see you guys on Monday, next week Monday on YouTube. Here I am wishing you guys a great profitable week ahead. Make sure that you are in the Telegram channel where we send out trading ideas, where we do analysis, we send risk management tips, or everything that will help you to become a profitable trader and a better trader. Please make sure that you join the Telegram channel. We'll take it from there. It was an absolute pleasure hosting you guys today, and until next time, I wish you guys all the best. I wish you guys a profitable week, and remember, I love you and Jesus loves you. That's it from me, guys. Have a good evening and a profitable week. I love you so much. Cheers.